Okay, welcome back. Samuel Levitz, President of Financial Reboot. This is the segment of the show where we're going to actually answer your questions from the previous week. We have a lot of them coming in. I'm here with Pat Comer, our Chief Investment Strategist with Financial Reboot, and I thought it would be appropriate to kind of dig into some of these questions for everybody so we can answer these questions as we go along week to week. So let's get right into it. This one question comes from Tim. He says, how do you know when to sell? Now, this is a good question, Pat, because when I started, you remember my story, I had this portfolio that I brought to Pat when we first met as kind of, we did what we call a case study.
Absolutely.
And we wanted to see, the first thing we do here at Financial Reboot when we bring new clients on board is we do we cleanse, basically. We've got to find out what there is to sell, right? So Tim is asking, how do you know when to sell? That was the biggest issue with my portfolio is I had an emotional attachment to several items in my portfolio that had just dropped in value in a major way. And I didn't want to sell because I was really hoping that they would just shoot up in value at some point. So answer that question for Tim and the audience here.
There's actually a very simple answer to this. In your situation, Samuel, your stocks had gone down very fast, very quickly. Then it's too late to ask when you should sell. You should have set stop losses on them. They would have automatically sold before they lost too much. It's better to tap out on a stock with a minimal loss than it is to go 60-70% upside down. The other side is there are stocks going higher. When would you sell? Well, you have price targets. What is satisfactory to you? Or you can do a trailing stop, which means your stop loss would get higher as the stock goes up.
So to put it simple terms for 98% of us that don't understand any of that stuff, when we talk to our clients, we like to say one major thing, and that is we don't need to get greedy, right? When you're seeing profits in your portfolio, like this could be another part of Tim's question is, how do you know when to sell? Look, if you're making 30, 40, 60, 100% profit in a 2-week period for your stock, take your profits. That's one thing I learned here through the growth of our company is that never be afraid to take profit.
You're absolutely right,
because
Samuel.
you could leverage that profit into another play to make even more.
Put that money back to work on something.
And it's kind of like playing with house money, which is
absolutely.
Those of you in Vegas, the concept of playing with house money. So that's cool. Let's get right into the next question. Thank you, Tim, for that one, by the way. This one comes from Suzanne. She says, I see the markets racing higher and people making money. Shouldn't I be buying too? Now, this was also one of my issues because I used to be a very emotional investor. I'd see people making all this money in gold or whatever it might be, and I would be like, ooh, I should buy now because it's hot, it's going up.
Sam, you hit it exactly on the head. The fear of missing out is a very powerful emotion. You want to take the emotion out of your trading. You want to be careful when the markets are going higher. You need to individually look at your stocks. You don't want to buy at tops. We had a problem with your portfolio originally because a lot of the picks were made at tops. But that's basically what it is. You have to cautiously go into it and don't let emotion carry your trades.
And that, quite honestly, that's why our clients utilize us, because we no longer, at least I don't, and our investment strategists, they don't get emotional. They see what's happening, they figure it out, they put us into the things that are going to be non-emotional type of trades, right?
Absolutely, Samuel. You need to take the emotion out because the tops will create a lot of euphoria, and adrenaline is a big enemy.
God, I have lost so much money in the past on emotional trading, and I'm so glad I don't do that anymore. So let that be a lesson to you. Take the emotion out and, a lot of people do the contrarian method, right?
Absolutely.
And when everyone's buying, that could be a good time to sell.
Absolutely. There's an old saying, buy when they sell when they buy.
Yeah. So if you're a client with us, you get to figure these out. But stay tuned to the show because we talk about all this stuff on a weekly basis. This one comes from, who is this one? This one comes from Stacy. She says, this is a good one. How will the upcoming presidential election affect the market?
Samuel, this is the most common question you see in the media right now. Yeah. Trump, Hillary. Let me make this very simple for you. The election really didn't start until the conventions are over and the nominees are set. But we really won't know until we get close to November how the election is going to affect the markets as a whole and in the long terms. Every time you get a poll, if Trump's ahead, if Hillary's ahead, it's going to swing something some way. just going back to the last questions, keep the emotion out of it. Be very intelligent about your trading, and analyze your stocks. Don't analyze the election. Analyze your stocks.
So one of the things we go through is we kind of like to forecast upcoming events. We're going to get into that in the next segment on what we see coming in the future with the FANG stocks, the S&P 500, the presidential elections, all these things, the potential rate hike from the Fed, right? That's another big one. We'll get into that here in the next segment. But we like to see what's coming, especially with release dates, and plan on if this happens, then this happens.
Yes, sir.
If this happens, then we hedge and go this way, right? So
Yes, sir.
we're going to get into all these cool things on how we do what we do to get the gains that we get and how you could leverage that for your portfolio. And that's the whole reason we do this show, really to help the average investor that maybe doesn't even know what the S&P 500 stands for, but really to get them into the right frame of mind to make money like Wall Street, but you don't have to work on Wall Street.